I'm Thalia Hayden with ETF Guide. Today, the rare earth metals market sits at roughly $14 billion. It's on track to more than double by the mid-2030s. And to help investors understand these important materials, we're talking with Steve Schoffstall, Managing Partner, Head of ETFs at Sprott Asset Management. Welcome back, Steve.
It's great to be back. Thank you.
Good to see you. Rare earths are the silent engines behind our smartphones, EVs, and defense equipment. They've also been called the vitamins of modern industry. What are rare earth elements and what makes them so important to today's economy?
Sure. So rare earths are a group of 17 different elements. They're chemically similar. They have magnetic properties. We do consider them to be critical materials, and you'll see those on a lot of different critical minerals lists across many different countries. One of the important things to note about rare earths is they're not rare. What is rare is finding them in a concentration that makes mining them economically viable. And because the magnetic properties in particular, rare earths are extremely important to a lot of different industries, including technology and defense.
Okay, now let's focus on the demand side. What industry sectors are experiencing the greatest need for rare earths?
Yeah, artificial intelligence, defense, energy transition, those are three key industries that are really driving growth in rare earths. And the important thing to note about rare earths is that they're very important to a lot of different aspects of these different aspects of the economy, and they can't be substituted. So that's what makes them so important. When you look at the structural demand and the strategic demand that we're seeing from rare earths, there's a lot of spending and a lot of investment happening behind the scenes. The investments in energy transition, artificial intelligence, defense, that's all increased by about 78% since 2020. So it's over $5 trillion of the global economy going into these three key sectors. When you look at things like defense, a lot of things that are in the current headlines are where we see a lot of rare earths being used. Things like missile guidance systems, drones, anti-missile defense. If you look at the F-35 fighter jet, that actually uses 900 pounds of rare earths in each jet by itself. In technology, it's used in things like AI data centers, robotics, particularly humanoid robotics, which is slated to be an expanding and growing part of the overall robotics landscape. And then we see them also in energy transition, so things like EVs and wind turbines, where the very powerful magnets are essential to making those either produce energy in the case of wind turbines or powering the EV engine.
Got it. Now, Steve, China is often talked about in the same breath as rare earths. What role does China play in the rare earth supply chain?
Yeah, this is an industry that the U.S. once dominated up until about the early 1990s. And since that time, China was really able to take control away from the United States, whether through acquiring intelligence on how to separate and manufacture rare earths and magnets and the mining process. But all told, now China currently owns about 69% of all rare earths mining. And when we look at refining and magnet production, it's well over 90%. So a very significant player in the global rare earths market. What makes China so important is that they've shown a history of looking to weaponize their ownership over the supply chain for rare earths. They could do this in a number of different ways. Just last year, on two different occasions in April and October, we actually saw China impose export restrictions on a lot of different rare earths to Western countries, the United States included. We've seen in the past where they've pushed prices lower to keep new entrants out of the market so that they can continue to hold the pole position in rare earth production. And we've also seen in Japan's case where they've cut off in the past, back in 2010, shipping rare earths to the country. So it's come a very important national and economic security concern. And that's why we're seeing the United States and like-minded allies really look to reshore and friendshore this very valuable and important supply chain.
Yeah, with that said, what steps are Western nations taking to decrease dependence on China?
Sure. There's a couple of things that are happening at the moment. So we saw last October where the United States and Australia and Japan separately in agreements have worked out frameworks where they can increase cooperation around increasing rare earths production. This is very important as it relates to not only providing financing for new projects, but it also strikes at one of the things that's plagued mining, and it is this long lead time around the permitting process for new mines. So it looks to ease that aspect of it. We also see that the European Union and United States, just last week, some information came out that they're working on a partnership as it relates to critical materials and looking to not only invest in critical materials and secure those supply chains, but we're seeing in a lot of cases, governments, particularly the U.S. government, is looking to take direct investments into many of these rare earths miners. We've seen that with MP Materials. There's an Australian miner, Lynas Rare Earths. We've seen some direct investment there. So what this does is it really aligns the goals of this strategic and important aspect of the supply chain with national security concerns. And through these agreements, not only are, in some cases, are they looking to purchase up to 10 years of the output of rare earths production from some of these mines, but what we do see is something that we really haven't seen outside of the last 12 months or so, which is where price floors are now becoming an aspect to rare earths mining and rare earths production. And this is all geared toward providing some certainty around investing in the rare earth space. And that's where the United States has made some inroads on the price floors. But there's also discussions at the EU and the G7 level also to provide some price floors. So a lot of moving parts here, all aimed at reducing China's importance in the global supply chain.
Okay, now the Sprott Rare Earths ex-China ETF, ticker REXC, offers a unique investment approach. How is REXC different from its peer group, and what makes it a potentially compelling choice?
We're really excited to bring this fund to market. It's the only ETF out there that has a dedicated focus to rare earths, and that's its only focus, is investing in rare earths companies. On top of that, it brings what we've become to be known for at Sprott, which is our pure play methodology. So we do have that 50% threshold for investing in rare earths companies, things like miners, development, exploration companies, refiners, separation. All of these are very important aspects of the rare earth supply chain. And what that does is not only does it provide exposure to mining, but it also provides some exposure to on the downstream side of things. The important thing that kind of the third difference I think that we typically see versus other funds that do provide exposure to rare earths is that ours has an explicit ex-China focus. So we've gone through the index methodology and developed it because we believe that the investment opportunity moving forward largely exists outside of China. That's where we see a lot of the investment headwinds happening. We wanted to make sure that was front and center. So all told, the strategy has about 96% allocation to rare earths, which is way higher than what we see from other strategies. Typically, what you'll see is from other existing ETF strategies, we're seeing a change where they're starting to market themselves as rare earth companies. In many cases, we're seeing they'll provide somewhere around 10% exposure, all the way down to 6% exposure to rare earths, which is stark difference to what we're seeing from the over 95% afforded to REXC strategy.
Good stuff. Now, final question, Steve. What role might REXC play inside a diversified portfolio that may already have broader exposure to other critical materials and mining stocks?
Sure. So, as you're aware, critical materials is a very broad category, or even broader would be the general miners. So when you start to look at things like uranium, for example, those types of funds wouldn't provide exposure to rare earths. If you're involved in or invested in more of the broader based approach, typically we're not seeing a lot of exposure to rare earths in those portfolios. And a lot of times what we're seeing is the exposure that investors do have has a significant weighting to China. So this solves two of those needs, and we think it's kind of fits in that area where we're seeing that strategic importance of investing not only in rare earths companies, but rare earths companies outside of China. So rare earths have a strategic importance that doesn't exist with a lot of other metals that we see, and that structural demand that we're seeing can provide resiliency to economic downturns. So that's another benefit that we're seeing coming out of rare earths investing as well.
All right, Steve, thanks so much for your timely insights and keep up the great work.
Great. Looking forward to next time.
See you next time. And that does it for today's episode of Metals in Motion. Thanks so much for joining us. And if you enjoyed the show, please tell us in that comment section below and be sure to hit that like button. To learn more about the critical materials and ETF we discussed on today's program, be sure to visit SprottETFs.com. Finally, if you missed previous episodes of Metals in Motion, just hit the Metals in Motion playlist to catch up. I'm Thalia Hayden with ETF Guide. Thanks for watching, and we'll see you next time.